I'm bored. Let's look at some trading stuff. I've been meaning to backtest AU. 15-minute entries. I'm just gonna look at some pre-COVID data. I don't know, just kind of poke around, see what I find. I figured this would be good for people to see kind of how I just study price action in general. Sometimes I use bar replay, sometimes I don't. In this case, I'm looking at the chart right now and I know it's going to run bearish. So, I'll use that as my kind of cheat. My only cheating in this, I'll run some bar replay, look at 15-minute. Just kind of see what's going on. I want to focus on a couple things to show you guys, like, when do I look for counter trend trading? When do I look for pro trend trading? Which is probably more obvious. Where do I qualify liquidity based on supply and demand, and the reactions based on who's in control and that kind of thing. So I'm just gonna try to think out loud, and then if the video makes sense, I'll release it. If it doesn't make sense, I won't release it, I guess. All right, yeah, so let's see what's going on. So I'm gonna look at AU because, again, I've been meaning to test it. I know Aaron's been trading it quite a bit and he's doing very well with it, so the FOMO in me wants to take a look at it. In the US, I have Awanda for brokerage, and it's not the best spreads. I trade a high volume, so they give me better spreads than average, but it's still not great. So my personal account, I tend to just trade 15-minute zones. So I kind of want to practice it on here, kind of broaden my my horizons in terms of the pairs that I trade. I do primarily trade GU, but I wouldn't mind trading AU, excuse me, because AU does like to move during Asia quite a bit, which would be nice for me because kids are in bed and I don't have too much stress going on. The community is not too active and I can trade and focus. So the idea of that's kind of nice. So I'm gonna poke around and just take a look and just a couple trades and see what's going on. And yeah, I'll try to think out loud for you guys. Where should I? I'm just gonna look in here, right? So just bar replay this. Now, one thing I want you guys to keep in mind is, like, in terms of order flow, right? I always ask myself, who's in control? If supply is in control, then why is demand giving a reaction, kind of thing, right? And then that plays heavily into when I look for counter trend trades. Now, I don't typically look for counter trend trades in a demand zone if supply is in control. I wait for that demand to fail, right? Because it indicates, one, that supply is in control. It also gives me something to sweep, because if demand gives a reaction and then that demand fails, when it comes back, it tends to come and take that level out. And if it doesn't, it's no big deal. It is what it is. But like in terms of remaining consistent, it's important to kind of look for the same setups every time. So for me, a counter trend trade has to take out demand if supply is in control, and then I can look for a setup, right? It's better if it mitigates something, but sometimes it's just it just takes low and then it chalks and then it, and then it goes. So the first thing I want to do is I want to assess like current price, like what is price doing? Why are we getting kind of higher highs and higher lows? Like, what is price doing? Now, based on what I'm seeing here, I would say that price is probably just pulling back on the higher time frame, like the daily or something like that. So what I want to do is I want to focus on the previous leg, and I want to figure out which one might give me, basically, it might put me back into pro trend, right? Because this is technically counter trend. If this is pro trend, bearish. So I want to see what's going on. Now, I probably could have rewound a little further back, but whatever. All right, we'll just pretend like this is current price action, right? So I see this as valid demand, right? You can see here, right? This is kind of what I like to look for, essentially, is I want to see demand give a reaction. You can see that this doesn't really react. It reacts to more of like this entire range. So, you can do with that what you will, but we're not going to focus on this PA. So here, right, I want to justify this reaction. Why did price halt here? Why did it pull back? Came into this wick. That's demand. Who's in control? Supply. So why did demand give a reaction of supplies and controls to build liquidity. And now what I mean by liquidity is sometimes it's to be swept, sometimes it's to be used as part of the supply chain or demand chain, but often what it is just the idea that price is going to come into that level to use it to either run price lower or potentially sweep it and do whatever. But what we do is we retrade the reaction, right? We pick those POIs out, and then we more or less focus on what happens after a price hits that POI. So we have that demand reaction, we have the push up, right? And then of course obviously the push down, and this kind of price action here indicates that supply is in control. So when price comes into a level like this or potentially higher, we would want to be aware that we are now probably going pro trend bearish, and that we want to look for shorts, right? Because that would be the pro trend move. Anyway, so that's my general thought process. So now I have this valid supply zone, so I'm just going to diet demand that because I like to keep it clean. This, I know I have a reaction, it's a little far away, so again, that's my supply, diet supply, nice and clean. Now what you'll notice is that in the pullback, in the counter trend pullback, you have price making relatively bullish structure. However, there are points within this leg that price would, take the low, come take this high. This was mitigated, right? This PA could in general throw you off because this low gets taken too, and then it comes and takes this high, right? It's potentially confusing, but this is typical counter trend price action. So it wouldn't really bother me too much. I know where my valid POI is. Like, none of this stuff is really valid in terms of like finding the potential like catalyst that's going to drop price lower. I mean, obviously it could, right? But at the same time, there's like better zones. They're higher up. So like if I got a short here, if I got a short here, you target the low. You don't really aim much lower than it. Now, because price currently is coming into this supply zone, right, and we're getting this reaction, like this is a big candle. These are all big candles right here, to be honest, all these sell candles, right? But what is that coming into? This, let's see, this is coming into some wicks. There's obviously a bit of a range in here. You can tell by the fact that you have this doji candle with this long wick to the downside, this wick to the upside. So clearly something happened here after we took out the lows. We got a pullback, price then pushed to the downside, retrace. There's probably a really nice entry in here for this short, but you can see that price came in to mitigate whatever it left here, and then it pushed down. Now ultimately demand held, price did not break the low. We still have this really valid POI up here, so shorting from this area probably would have been pretty nice. One thing I tell people all the time is it's important to know your range, right? Especially if you're counter trend trading. It's not often that price is just gonna, go to hell or moon or something like that. If you're in a counter trend move, often it's just gonna play within its own range. I think this applies to all trading, counter trend, pro trend, intraday, swing, whatever, right? If you can understand what range you're trading within, your highs and your lows of the day, highs and lows of the 15-minute structure, highs and lows of the 1-minute structure, these are good things to have in mind because they're going to help you take reasonable profits, right? Not everything that we're going to trade is going to tank or going to moon. Often it's just going to play within its own structure and range, and then eventually there'll be a move that just blows through structure, right? And that's kind of what we look to find, right? That's the optimal trading stuff. But let's be honest, a lot of us don't always take high probability setups, right? A lot of us take subpar setups, and then eventually we might stumble upon a high probability setup, and you have to be able to know the difference. If you don't know the difference, right, based on your POI selection, you're going to hold a trade for too long, right? Make a plan for that trade, find a take profit level, and make sure you parcel out appropriately. For me, I break even at a very specific level. I just do break even plus commissions because, by the way that the setup works, it doesn't really come back to the entry, right? And that's just the nature of what I look for. Now, what I also do is I typically target very specific supply or demand zones and remove 90% of my trade, and I let 10% run. That's just my management. Again, like I said before, it's really about being consistent. If you can be consistent in how you select your POIs, consistent in how you enter your trades, consistent in how you manage your trades, consistent in how you take profits, that is going to provide a long-term consistency, right? That's the definition of consistency. It's being consistent in every aspect that requires consistency. So anyway, price hits the supply zone, right? We get a huge push to the downside. You know, again, this is the 4 hour. We can look at the 15 a little bit to try to find entries or whatever. But you know, what I'd want to say is, like, again, I have potentially valid POIs within this price action, right? I need to kind of figure out what price is doing, where it might come into for my pro trend move, but at the same time, it's very low in the leg, right? So what I want to do now is ask myself, who's in control? I know supply is in control, but has it really shown itself yet? Now, up in this price action, it wasn't. I mean, personally, I would say it's pretty obvious with this large candle. We take out this demand zone there, but ultimately our low is here, but we do have nice structure right here, right? So in terms of a chalk off of a bearish supply zone, that's our first sign or indication that price wants to trade lower. Our second sign that price wants to trade lower is the failure to break the high. Then, of course, that low goes, and then this low goes. So for me, this is pretty obvious that price wants to trade lower, right? Which is a good sign because, again, our pro trend move is short. We've hit this very significant supply zone, and we're getting a lot of confirmation that price wants to trade short. So I'll clean this up. I'll mark this up appropriately. Right. Chalk. That's a break of that low. All right, that's a break of this low. So now the question is, where do I want to trade long from? Do I want to trade long from this demand zone? I would probably say not. If something sets up, I would maybe take it, but I would be very cautious. I would probably manage to trade very aggressively in terms of my break even and take profits very early, kind of thing. But the highest probability for me to take a counter trend trade is going to be after demand fails, right? So now I want to see demand give a reaction, because that gives me liquidity for price to take out if I get a setup when demand fails. Does that make sense? But then when demand fails, that indicates to me again, who's in control? Supply. So it allows me to say I can trade counter trend long, pro trend short. So now I have a directional bias in both ways. Cool. I'm gonna go to the 15. If I even, okay, I do have the 15. All right. And these are my previous indications that price wanted to trade lower on the 4 hour. Obviously, it's a little bit more obvious here on the 15. All right, we took the high, we took the low. I'll clean the rest of this up to keep it clean. Now I won't go too much into internal and external range liquidity, but essentially every structure piece that you see here is most likely a session low. London, New York, Asia. And each of these lows is liquidity, right? So price will typically target them on the way back down once price shift structure. Now there's some pretty interesting structure between here and here. Whatever, there's a long, great, fine, doesn't matter, right? I'm gonna turn this on. Oh, I have to turn this up. Oh, that's hideous. Right, but what do you notice? Low, New York low. Low, Asia low. New York low. New York low, Asia low, London low, Asia low. Right? So when it comes down to like market cycles and that kind of stuff, often price wants to come and it wants to retrieve the liquidity from these previous sessions, right? So when you, let's say you, for instance, you found yourself in a trade here, somehow it didn't really come into anything, but you took the short, right? Once some of these sessions and these lows start to go, you should have confidence to hold it through the rest of them, because that's the theory of internal range liquidity, is that these lows kind of have to go, right? So that stuff aside, look at the video. Brad made an awesome video on the refinement content if you didn't watch it. Price comes down, we get our first kind of reaction to demand, right? Cool. I'm just gonna play it forward. That was weird. Kind of quickly. Okay, so we don't get much of a reaction. Oh, I'm sorry. We get a reaction to it, right? It ranges for some time. This is like almost a whole day, I feel. 2 days worth of range, right? And then price starts to just book it for the downside. Now, what that tells me is that this level here is probably just liquidity. So if price decided to shift structure after taking out this low, there's a good chance that price will at least make it to this level, right? So I can take partials here, or I can do something else. But again, I don't, if it sets up, I think it does, based on, again, that little bit of hindsight stuff that I was looking at. So there's that first indication that demand is not holding, right? So I'm gonna clean that up. Again, this is 4-hour demand, it's fine. It works on the 15, same difference. You can do it as a fractal kind of thing. You do it on the 1 minute. Okay, so this, after it took out that low, and again, what session was that? That's Asia, yeah, Asia low. Go figure, right? Sweeps the Asia low, and we get this huge push to the upside. Now, of course, there might be something on the lower time frame here, but I'm going to focus on the 15 minute. I don't want to lose sight of this left side here, but let's just see what happens, right? Yeah, we have supply. We have got some buy to sell wicks. We got some reactions. We get a little bit of a chalk here. It takes this low, and then it takes this high, and price doesn't quite pull back yet. So we need to kind of see what happens here. So I'm going to mark this out as my supply. Jesus, that's a big candle. Oh, that's spread hours. That's why. I'm just going to do this. Drag my supply out. I need the supply to fail, otherwise I can't trade along, basically. Technically it's a valid PY, so let's see. This didn't go very far below. I wouldn't mind seeing price trade a little bit lower, but you know, let's just say we take it. Okay, that's fine. All right. So now the question is, what do we do? Right. Now, if demand is in control, technically that means that this reaction to supply should be liquidity, which means that this would be a sweep liquidity, which potentially means that this is our entry. I don't like that wick, but let's just mark it up and see what happens. That wick is down here though, so we gotta be cautious of that. Right? Okay. Fine, that first level fails. You need a reaction there. This level is going to fail too. It's failing to create bullish structure, right? So we're getting bearish structure, so that eventually is taken out, I assume. Okay, so that's gone. Okay, fine, no problem. Let's just continue to see what happens, right? This is the inherent risk with counter trend trading in general, right? Let's just see what's up. Now, this failure of supply wasn't exactly ideal anyway, right? Okay, fine, right? Like I said earlier, right? This failure of demand isn't exactly the sexiest. It's not the best, right? This is a much better indication that demand is failing and supply is in control. This wick here, it's nice. It definitely implies that supply is in control, but seeing something like this is nice. So let's see what happens next. Okay, fine. And a nice little supply zone there, right? Buy sell wicks, that's the reaction there. Sure. Okay, that fails. Now this is my reaction to that demand. or to that supply. So let's see how this works. Pretty significant push to the upside. So let's throw an entry on. 6. Just cover that low. 6. Should be able to get away with 6. Okay. Alright, so we're in this trade, right? It's moving nicely. Now typically what I do is my break even, right? And this is again how I remain consistent with my break even. My break even comes when I break the level that has given me the pullback for my entry, right? So now we're in this, right? Now I know that this is all liquidity, or at least I can kind of assume that it's liquidity because this is my initial reaction to that demand. This you can qualify as part of that reaction as well. So in general, just consolidation, liquidity, whatever. I don't expect much reaction from this. We'll probably get something, but overall I think price will push through this. Now, the beauty of taking a trade like this is that when you get a failure of this demand, this is considered external range liquidity. So in terms of internal and external range liquidity, everything within the range, all these lows here are internal range liquidity. The external range liquidity is the high and the low. Once you take out the external range liquidity, that's primarily when you get the best counter trend or potentially pro trend moves, right? Depends on how price is playing in the overall direction, whatever. Now the cool thing about this is once we take out this high, that's the first level of internal range liquidity that we can expect to go. So I would expect this to go. And I need to look at the higher time frame to see where my valid supply zones are. But we'll kind of play it by ear. So back to the break even part, right? This high is the catalyst essentially that gave me my pullback for my entry. Now, I could trade the EQ here, which is typically what I do on my personal account is 15-minute EQ, but I wanted to get in this for the video. So in terms of consistency, what I do, 15-minute EQ. Right, so as soon as this high broke, that would put me at break even, right? That's just how I trade, right? It's typically from my data, price doesn't really come back to my entry or this entry, and that seems to be the standard practice for me. That seems to work out the best. So let me clean this up. Entry, we're in. I'm not going to look at for any scalings. I don't really care. I'm going to go back to the 4 hour real quick because I need to assess the pro trend move. I need to know where price could potentially come into. All right, so this is a very large candle, right? So I need to assess what's happening here. So this, right? This reaction, I want to know why price is doing this, right? I need to understand what price came into that gave it this reaction. I don't look at the 1 hour, but this is such a big candle, so I need to do something. So I'm going to do 2 hour. Nope. No. I'm trying not to cheat. Oh no, we're good, so. Alright, so the 2 hour. 1 hour. Okay, good. Alright, so again, all I'm trying to do is justify this reaction, right? I want to know why prices all of a sudden come up and then just stopped here and started to come to the downside. So I'm just scaling through time frames to figure out like how I can justify it. So it turns out the 1 hour is the best way to do that. Again, I very rarely look at the 1 hour, but in this particular case, I kind of need to do this. So we're back to the 4 hour. So now I have that reaction. What am I doing? Oh, right, supply. All right, so I have that. That presses into that. And then potentially this is kind of our last kind of unmitigated zone. So we'll kind of see what happens here. It's very possible for price to trade higher. But let's go to 15. Let's just see what's happening. Maybe I break even here. Maybe I don't. I don't know. just gonna press it forward very quickly. Okay, so we break even, not a problem, right? Just move this here. Right, yeah, breaking even, fine. So what do I have left? I still have this extreme level, right? So we can keep that, keep an eye on that and see what's going on. So the real question now is, what did I miss? I'll clean this up. That was a break-even trade. Price came into, go figure. Buy to sell wicks. I feel like I said something about this buy to sell wicks and I kind of disregarded them. This is the danger of like bar replay in general, is you kind of move quickly through this stuff. Okay, yeah, so that's what price came into. Price came into this guy right there. Right, buy to sell wicks. This was a reaction to this demand here. Price reacted, right? Price attempted to push up. This big sell candle ended up sweeping out that wick there and this wick right here. So sweep of liquidity, sell candle before the push up. Fine. The issue with this one was there was no sweep of liquidity. I mean, it took out these buy sell wicks, so you could say that's a sweep. That's why we got this reaction. It was a good trade, but it didn't work out fine. Price came into this. I missed it. Whatever. It happens, right? So now the question is, what's happening now, right? Price is pushed up into this zone, right? So this is part of that kind of supply chain that we built out earlier. Let's see if I can. Right, price takes out that high. Now for me, my POI would be this one. It's a bigger wick, right? Hasn't quite been mitigated yet. This takes out this high here. So it says a valid sweep. We have now chalked to the downside based on this low here. And then I wish I didn't go through too fast through this. There's a nice chalk right there. That's good. Let's see what else we get. So again, price coming off this kind of supply chain here is pretty significant, right? So, you know, I'm hoping I didn't miss the pro trend move. What I should have done is refine this. There's not much to refine though. That's the problem. Like this 15-minute candle is kind of insane. EQ wouldn't have gotten tapped anyway. So let's just keep playing price forward, see what we get. Now I'm just studying price to see where I could have gotten in, if anywhere in here. Now one thing I want to see, right? Because technically we hit that external range liquidity. We did push price to the upside. I know I'm bearish, but there is a chance that price will come off of this. What's the best POI? Cover that wick. Let's spread hours. I still want to see it come over. Okay, didn't want to come over. Fine. I'm going to place an entry on this. 9 pips. Let's see if we can take an EQ trade on it. A little bit better stop loss there. Okay, so no EQ trade, but we do get tagged in on the external part of this 15-minute zone, so that's good, right? And price is moving pretty well. So let's just see what's going on here. See if there's any way that we can maybe scale in. Now, the thing with this is, once we took out this external range, right? Once this demand failed, and we hit this level here, right? There's a good chance that this level there's a good chance it won't do too much, right? Obviously, we'll have to manage price as we see, and we want to trade within our range. Technically, our range is probably going to be this to this, but potentially this to that as well, right? So with that being said, probably the best level to take 90% off of that trade is going to be one of those two levels there. So what I want to see is I want to see if there's anywhere else we could have gone in. Alright, so there's that low there. Now price is holding this demand zone. Alright, supply is in control. So I kind of want to see what's going on. Now, if this demand fails, what I think I can say is that this is part of a supply chain. Right, because every time price comes up into it, it holds. So that to me indicates that price would probably want to hold this level if this demand fails. Now I'm not going to trade it until the demand fails, because once the demand fails, it tells me that price wants to trade lower. So I need to see that. Okay, so now my POI is shifted to this one, and we have that demand failure. It's a wick, but it's still a demand failure. I'll put my POI above that. There's that failure with a little bit more to it. And that should have tagged us in. Oh my god. I can't stand the stress. I'm just gonna play it through. We're still in. Okay, so now where's my break-even level? Right? This low is the catalyst for the pullback that got us into the trade. So when price breaks that low, that will break it even. And now I'm broken even, right? So here, we're still within this trade, right? We have that low gone there, right? Again, we kind of knew this wasn't going to do too much because, again, it's kind of like this. It's the same thing, right? Demand reaction, supply chain, demand fails, supply is in control. Price comes up, it pulls away. This low is equivalent to this low. To this low. Often price doesn't do too much with it. Now, I need to go back to the 4 hour because I need to know where the hell we're going with this. This is the ultimate low here of this range. Now, this, in terms of expectation order flow, price trades up and it trades down. Now, what happens typically with these lows? They get wrecked, right? So, but I want to see what happens when price actually comes through this level. Good chance we're going to pull back. Potentially not. I don't know. We'll see. So we're in this. I think just hold it. We're broken even. This one, the break-even point on this one's a little tricky. This is more like a secondary mitigation. You don't want to wait until this low to break it. This would be one of the ones that you feel, where we feel comfortable, just break it even. If there's no obvious level, right? Because we didn't play the demand reaction failure entry, right? I think we could have here though. Let's look back. All right, price comes down, There's no real reaction to any kind of demand. Here again, there's a nice level of demand that we can mark up. Because again, what you want to do is you want to justify this reaction. Why did price push up? Why did it take out this high? Well, it came to mitigate this. Right? So then what happened? When do I look for the trade? I look for the trade when this level here fails. Where's my entry? This inside bar. Right? Demand fails. Supplies in control. This is the POI. This swept liquidity. Mitigated something less. So I got a little bit of a supply chain. Okay? And there's a nice entry right there. Yeah. So missed scaling. No big deal. Right? It's good to go back and look. Here we took this one. This one's working out nicely so far. I could have gotten away with the EQ, but again, just for the sake of this video, I'll just do the edges. Okay, now we've absolutely demolished this low. So if I were to want to take a long, right, it would be so after the fact, but I would need a nice setup, you know, but we'll see. And then we just keep taking the long, or keep taking the short. Right, there is a potential valid entry, or sorry, there's no, let's see. Here, demand reaction. Sweep, but price doesn't come back, right? So no entry, right? I'm just trying to stay consistent. That's all that matters to me. Here, this is basically the whole demand reaction right here. Now, one thing you'll notice is that I don't really pull the demand zones from previous legs. I'm aware that they're there from an inside or like an internal range liquidity aspect, but once we start pulling away from like the real, like the apex, like the top of these ranges, or like in this kind of stuff, I'll look at the demand from close by. But once we start getting away from this, I don't look at the demand. Obviously, there's no demand there. This one's the same thing. It's like once price starts to pull away like this, I don't look at these demand zones. I look at the demand zones within the current leg. Because once you start looking at demand zones from previous legs, you're going to start taking your trade off at the wrong areas. You're going to be looking for longs in the wrong area, all that stuff, right? So let's just say we kept one of these guys on. We TP'd this one, 10R. We didn't like the stop loss anyways. This one's a runner. Okay, we need to look at the 4-hour again. Right, we've caught some pretty nice trades. Not the best. I missed this counter trend one, which was unfortunate. So I feel like I was spending the whole time talking about how best counter trend trades come after taking out the lows, and I managed to miss the trade. But this is the general idea, right? What happened to this level? Did we get any reaction to this? No. It just ripped straight through it. That didn't even touch it. That touched something in this like range here. But this POI itself, nothing. Right. Okay. Yeah, I don't know what else to go over. It's just melting. Melty. You're happy with your 10R for the week, so you decide to let this one run. You're running 36R. You risked like 4%. You're a millionaire now. Keeps going. Where is that trade? Yep. And COVID, and then it resets. Whatever. Yeah, I hope that helps. I just kind of wanted to look at some of these levels. I didn't want to go too deep into it. You know, I still got to edit this and all that other stuff. But I hope this helps a little bit, or at least, you know, like I didn't do the best job of bar replaying and getting in whatever. But we did manage to catch a nice early entry trade. We missed a scaling opportunity, but we took one here and went over our break-even rules, best time to take counter trend trades, and you know, supply chain importance and that kind of stuff. You know, this is typically what I'm looking for on a daily basis. Often it's done on the 1 minute, Like a lot of times you can take these 15-minute zones and go to the 1 minute and look for a better entry in terms of stop loss and that kind of stuff, right? But I hope that helps. I don't know what I'm going to call this video. I'll have to figure that out. But I hope you have a good rest of the week, and I'll see you guys tomorrow. See ya.